At 8:30 a.m., we had producer price index. Right here, the PPI is denoted by a vertical line, which is right here. And basically, obviously, I'm not going to trade PPI. And as I'm sitting in my first period class, watching PPI unfold with all these consecutive downward candles, I'm thinking to myself, I want to short the pullback because I want to target these sell side liquidity levels on the higher time frame. These equal lows right here, this low right here. And by the way, like there was really no SMT divergences on these lows with ES, so it looked extremely clean to me. Therefore, as I'm watching PPI unfold and I finally get the pullback, I short and I'm in like 200 drawdown for a little bit. So I place my stop loss over here. We start to hover around the sell side liquidity and I'm thinking, okay, let me just take off some partials if we get there. I'm just hoping we get there. And I'm using this inverse fair value gap right here as a marker to kind of show like, okay, this is a place of resistance and I really want to see price reject off of that. And unfortunately, the market does open at, I mean, this is a fortunate thing, obviously, but the market opens at 9:30. And at 9:30, on that singular opening candle, I get stopped out. My stop loss is right here, by the way. Um, this is my stop loss. So you can see that gets taken out. Once that gets taken out, I'm thinking, okay, that's fine. I'm not really panicking because then it just makes me break even on the session because I had 240 profit from last night's Asia session. So I'm not really worried, but I am down 50 and also my mental game is impacted a little bit. So I'm looking to see any new opportunities. Obviously, we create this high and we don't really tap into this like gap that was formed by the PPI news. And I can draw it out. I was kind of visualizing it and I didn't use it too much in this trade, but basically here's that gap. We create this high and then we come down. I'm still not going to short it yet. Like I'm just waiting. And then once we take out the high again and we displace lower, we form this breakaway fair value gap right here. So this is a breakaway fair value gap. Sorry for taking long with these drawings. We form this breakaway fair value gap and then we just displace to the downside. But on that displacement, I couldn't wait any longer because I know how fast NASDAQ is going to move on this Judah swing. And I just know that it was really eager to take out the sell side liquidity. It formed these equal lows right here. You can see the sell side liquidity. And basically, I just took my short and I placed my stop loss over here. And it was a 20-point stop loss. So yeah, I entered in 5 micros. So it's only a $200 loss, which is still a big amount. But it's not as big as if I had 10 micros, which would mean a $400 loss. And so I end up adding 3 as this trade comes down to my first level, but I don't even want to take partials because I'm just so confident that's going to come down here. But my patience is tested later, and I'm going to explain that. But first, we come down to the sell side liquidity, which is actually the London lows, and I have that written out right there. And so once we come down to that sell side liquidity, we do get a little retracement all the way back above this high. And actually, I was contemplating putting my stop loss from here all the way over here, so I just lock in my profits. But it's really not worth doing that because the market's not done moving and it's already created such fast movement to the downside. This is just a small pullback, if anything. And so I have my stop loss still set over there. We take out the sell side liquidity, then we come back fast. And then right here at this line right here, I enter again 3 micros. And now my stop loss is worth 457, which is just a huge loss, if anything. Like a $500 loss is pretty crazy to me. However, it's a risk I'm willing to take, but I do end up adjusting my stop loss later in the trade to like be better. But basically, I wait obviously, and then once I see this pullback, I move my stop loss down to over here where I would only lose like $160 from this trade. And basically, then I'm secured. Like a 160 loss is not terrible. I'm only giving it that much break because there's like this fair value gap right here that we could just keep on tapping into. And I'll extend that for you real quick. It's really not that important of a fair value gap though. Like I feel like the inverse fair value gaps are so much more important. Basically, we tap the equilibrium at that point. And really the point that I'm looking at, if anything, and this is going to be kind of annoying for you guys to see, but I have all these executions. But right here, the equilibrium of this 4-hour fair value gap, this is going to be very important soon. And so I've had that 4-hour fair value gap drawn out for like 2 days now. And basically, I've been looking for the entire week for like some type of retracement into that. So that's why I'm super confident that since we're getting these big drawdowns in the market, that we're going to end up tapping into that 4-hour fair value gap. Now, if you're paying if you pay attention here, right, we have the sell side liquidity from these equal lows that was formed November 12th, November 13th. ES didn't even take those out actually. You can take a look here. ES took them out today, obviously, but it also didn't have like ES didn't have SMT divergence, which is extremely good to me because if ES had already taken that out and ES already took out this low and Nasdaq didn't, then I'd be looking for longs today. So that was a really big play in my bias for the shorts. And so basically, we come down, take out the sell side liquidity, my trade ends. But in between taking out the London low and the final sell side liquidity that I was looking for, there's a lot of patience testing. And I was really trying to follow a couple live streamers when I was in this trade just to see like what their reaction was to this chop. And I noticed like Tanya trades like exited her trade, Tyler trade exited his trade, and there's nothing wrong with that. It's just since I was already in profit like the entire trade, like I was really never in drawdown. You can see it never even like even for the rest of the day, it never even comes back up and tests like my profit line. So I could have like let this run the whole day. I was never really in drawdown, and I wasn't really afraid of drawdown. Well, actually, obviously, I'm afraid of drawdown, but I wasn't afraid of it coming back and testing, like, and giving me any type of drawdown. So I was really confident in holding this trade, but there was a lot of patience testing right here because there's a balanced price range. Price keeps on wicking above, wicking above, wicking above, but it's not showing any strong displacement to the upside, which makes me even more confident that, like, okay, let me keep giving it a little bit more time, a little bit more time, a little bit more time, and then look at this. This is a testament to how fast the NASDAQ really moves and how much money you can make in such a short amount of time if you're patient and if you're disciplined. 1, 2, 3, 4, 5. How many points is that from the top of this candle? 107, 107 to 54. $1,000. Okay, maybe not 1,000, but like $880 move in 5 minutes, and I collect my take profit. Just like that, I finished the trade up $1,200 and I close my laptop and I go to like I'm in my second period class, so I just like go to the bathroom and I'm just like using the bathroom. I'm thinking like, dang, like that trade was crazy because look at all this chop. When you see chop, you automatically like assume like, oh, it's sometimes a reversal, but basically this is something that I've really found useful. Invert scale. When you invert your scale, you'll be able to see that we're still like this is still displacement to the upside. We still have like this low that was taken out, this low that was taken out. Like we have so many reasons to believe that it's still going to go in the same direction. And so inverting the scale kind of helps me visualize things differently. So yeah, I mean, it could be an unhealthy habit because you're just trying to look at the market from a long perspective. But either way, it's pretty helpful. 950 to 1010 macro. We didn't really have much action. That's when Tyler Trades actually exited his trade, and I kind of disagreed with that. But I do really think I do respect him as a trader, and I think that just holding and just putting your stop loss right here would most likely be the most reasonable like exit if things were to go wrong. But either way, the short bias was really just generated from the 8:30 news, and so a lot of people don't like to trade news, and I don't. And like you're not really supposed to as a good trader, as a long-term profitable trader, which is why I didn't trade it. I traded after it. I traded it. I traded after it because it gave me a directional bias and confirmed my already directional bias because we had already taken out buy side liquidity like yesterday. Um, I took out this buy side liquidity. We actually swept this higher time frame buy side liquidity. And so one thing that I've learned from Justin Werline is that the best trades happen when you align the higher time frame with the lower time frame. And yeah, thanks for watching, and I hope you learned something about liquidity, fair value gaps, balanced price ranges, and even just how the market interacts with lows that haven't been taken out by SMT divergences.